Hello everyone, I hope everyone is doing fine. For the remaining weeks for this semester, you will learn the second component of accounting, which is management accounting or managerial accounting. There are 5 different topics under this component, and for today you will be learning on chapter 5A, which is a basic introduction to management accounting. There are 3 different LOs under this topic. I would like you to focus more on LO1 and LO2. LO3 are mostly equation, and you will have to know and understand how to do the calculation later on. Okay, let's start. Basically, for learning objective 1, you need to differentiate between management accounting and financial accounting. So here you can see 5 different features to differentiate between financial accounting and management accounting. For financial accounting, its main focus is to produce the financial statements. However, in management accounting, the focus is more on producing management reports. There are different uses of information for financial accounting and management accounting. External users such as creditors, suppliers, and investors are considered as external users to use the financial statement, as well as company management. External users such as investors use financial statement in their decision making, such as whether they want to continue investing in the company or to stop their investment. For company management, they usually use the financial statement for a performance review of the company. Management report are being used by the management in order for them to review a specific departments or a specific project, such as a report for sales department, report for production departments, and so on. So the nature of information for financial accounting is very objective, because it is based on a past information, and it must be prepared strictly according to the GAAP, which is the general accepted accounting principle. In Malaysia, the accepted accounting principle is the accounting standard set by MASB. However, for management reports, the accounting information is both objective and subjective. It can be objective because it also contains the past information, such as the sales target last year, the selling price last year, and what are the costs incurred last year. And it can be subjective as well, because it provides estimates of the current situation as well as information in the future. Therefore, we may use some subjective measures in order for us to obtain a future information. For financial statements, it is usually being prepared at a fixed intervals, usually a yearly financial statement. 1 year equals to a few financial statements. However, for management report, it can be prepared at fixed intervals such as monthly, quarterly, as well as yearly, and also can be prepared on as needed basis. On as needed basis means if the manager asks the management accountant to prepare a sales report for the first month of year 2020, therefore the management accountant must provide the management report as required just now. And the focus of reporting for financial accounting information portrays the company as a whole. However, for the management report, it can be portraying the company as a whole, or just a segment, or just a department in the company. So basically, financial statement caters external users. The information portrays the performance of the company to be used by the external users. But for management accounting information, it is mostly used internally by the own company in order for them to do their decision making. So you can read through the slides for more explanation, but basically I have given the summary on the previous slides just now. So this is a basic organization chart for a manufacturing company. You can read through the different responsibilities in a department in a company under manufacturing business. So this is the main focus, the second main focus of learning outcome 1, which is you need to understand what is the function of management, or what are the management processes. So there are five management processes. One is planning, second directing, third is controlling, fourth is improving, and fifth is decision making. So let's go through one by one. The management uses planning in developing the company's objective or goals and translating these objectives into course of action. So when you become a management someday, you need to plan for the whole company. If there is no plan for the company, it is highly unlikely the company could achieve a big success in the future. Therefore, management must plan what are their objectives and what are the goals that they want to achieve, and then translate these objectives that they have set just now into being implemented by the employees. So there are two types of planning, which is strategic planning and operational planning. Strategic planning is basically a long-term plan to achieve the company objective that has been set just now. It caters a long plan between 5 to 10 years. But for operational planning, this is a short-term plan which deals with the day-to-day operation of the company. The second process is directing. Once you have planned the objective and the goals for the company just now, the managers need to direct the plan towards the employee to implement it. Therefore, this is what we call as running day-to-day operation. Okay. So the manager must direct and lead the way so that the employees know how to achieve the objective and the goals just now. Third is controlling. Controlling is monitoring operating result and comparing actual result with what we have planned just now. So this allows for the management to receive feedback in order for them to identify what kind of mistake that have happened, what kind of deviation that happens during the process, and therefore they could suggest a solution to rectify those mistakes and deviations just now. This kind of philosophy of comparing the actual result with what we have expected before is called management by exception. The fourth one is improving. In order for a business to achieve more success, they need to continuously improving themselves. This includes improving the employees, business processes, as well as the product. The importance of continually improving themselves, either for the product and the processes, is to eliminate any kind of source of problems in one process. By having this process, they may found some redundancy of tasks which can be eliminated to save time as well as to save cost. For example, in this way, the right product services are delivered in the right quantities at the right time. So if this is the if this is the goal, then the management must identify from the production of the products and also until the delivery of the product to the customer, and ensure the processes from manufacturing the product until delivering to the customers are smooth. If they found some problem in between the process, therefore they could suggest any action to reduce or eliminate the problems in order for them to improve themselves, especially in time, to deliver the product to the customers. Lastly, this is a very prominent function for a management to take. Management is very popular for decision making. It is their main responsibility to decide on behalf of the company. Therefore, for one example of decision making is to decide among alternative action. Let me give you one example. A manufacturing company may have a dilemma whether they want to manufacture small parts on their own or to buy those small parts. For example, a manufacturing business main product is a furniture. So in order for you to build a furniture, you will need some woods, nails, as well as paint. So a management may have to decide whether they need whether it is profitable for them if they manufacture the nails on their own, or whether it is profitable for them to just buy the nails from another supplier. So these are the kinds of alternative that they have to choose. So to conclude, for learning outcome 1, managerial accounting has a lot of usage, but it is more popular whereby the information derived from management accounting could produce us information on how much the cost of manufacturing a product, which is very important because we need to determine the selling price. If you do not know the cost of your product, it is very hard for you to set your own selling price. And then the information as well allows us to compare the cost that we have incurred over time. For example, what was the cost last year and what is the cost this year, and what is the cost that you predicted for next year. In this way, it allows you to monitor and control the cost so that you can understand and investigate what makes the cost higher this year, or maybe um, identify a better supplier that provides you with a competitive rate as compared to last year. So this information is very important. And then the report also allows the management to identify any large amount of scrap materials or employee downtime. Okay, so the management report can give you the information to identify whether there are certain employees who did not perform as expected, or if you found out that some of the departments are producing too much scrap materials that have caused the company to incur more costs. And then management accounting information also allows the management to identify what kind of saving that they could possibly do to speed up the production process and help to lower down the costs. And then at the end, the report also helps to analyze how many units for the company to sell to cover the operating costs and expenses just now. So all of these you can actually see in the next chapters that you will learn throughout the semester. So this is for learning outcome 2. Before we start on learning outcome 2, I would like to bring you through a manufacturing process for a guitar. First, the customer needs to place order to the company, and once the company receive the order, the material department will prepare the materials to produce the guitar, such as wood, guitar strings, and guitar bridge. After that, the material department will send to the cutting department for the cutting employee to process the wood just now to make a shape of the guitar. And then the cutting employee will send to the assembly department, whereby assembly worker will assemble all those materials that have been sent from the materials department to produce a finished good, which is a finished guitar. So basically, this is the flow of manufacturing a guitar. So learning outcome 2 is basically focused on many different types of costs. So so the first one would be direct and indirect costs. Before you can distinguish between direct and indirect costs, you need to understand what is a cost. So a cost is a payment of cash or the commitment to pay cash in the future for the purpose of generating revenues. So it means that it's either you have already incurred the cost and pay the cost, or if you are already receiving the goods or the services, but then you choose to pay it in a later date, but you have received the materials and the services just now in order for you to produce the guitar for the purpose of generating revenues by selling the guitar just now. So that is cost. So there are two different type of costs here. You can actually categorize them into direct costs and indirect costs. So direct costs are the costs that can be identified and can be traced to a cost object. For example, the cost of wood used to make the guitar is a direct cost. So my tips would be, if you can see the materials in each product, that can be considered as direct cost because it is easily identified, very direct, very straightforward. You know what kind of materials are being used to produce the guitar. But for indirect costs, those are the costs that cannot be identified or cannot be traced to a product. For example, the salaries of production supervisors are considered as indirect costs to produce the guitar because their salaries cannot be identified to and traced to any individual guitar. For production supervisors, they will be supervising every single production of the guitar. Let's say the factory produces 100 guitar, therefore maybe 3 to 5 supervisors will monitor all 100 guitars just now. Therefore, you cannot directly apportion their salaries to one individual guitar because you cannot make sure that which supervisors are monitoring which guitar. Whether this supervisor A are focusing more on the first 50 guitar, or supervisor B are focusing more only for 3 guitars. You cannot actually make sure that. So that is considered as indirect cost. Okay, so again here, a quick illustration. Materials, just now the wood, the guitar strings, and the guitar bridge can be considered as direct cost because you can actually see this is the wood, this is the guitar string, and this is the guitar bridge. So you can actually see. However, in producing this one guitar, this is the production supervisors and the employee. So you cannot actually see the production supervisor in this guitar, but you know that they are employees, they are supervisors who supervise and monitor the production of the guitar. Therefore, it cannot be seen directly, so it is considered as indirect cost. And then it cannot be traceable, and then whatever cost that can be traceable is considered as direct cost just now, and not traceable is indirect cost. Something that you can see straight away from the guitar is usually considered as direct cost. However, if any cost that is not directly seen in the product can be categorized as indirect cost. Okay, and then the second type of cost is manufacturing costs. So manufacturing costs are the cost to produce a product. It consists of direct material costs, direct labor costs, and factory overhead costs. So these three costs consist of direct materials, direct labor, factory overhead as manufacturing costs. Okay, so let's go to the first one, which is the direct material cost. To be classified as a direct material cost, the cost must be both integral part of the finished product and also possess a significant portion of the total cost of the product. It means that it must be very significant and can be seen directly to the product, and it is very important to have that materials to build that product. Okay, for example, if you are building a guitar, if you do not have wood, it is almost impossible for you to produce a guitar. Same goes to producing a TV. If you don't have a screen, therefore it is unlikely for you to be able to produce the TV. Therefore, it is very integral, it is very important, it is very significant, and the total cost of those materials is a huge part of the cost of the product. So for example here, the cost of the wood to produce a guitar, the cost of electric components for a television, tires for an automobile. Okay, so if you don't have any tires, therefore you cannot sell a car. There is no car suppliers, car production, that sells a car without tires. Okay, therefore it is considered as a very significant and important part in producing the product. And then we go to the second one, which is direct labor costs. Okay, so in manufacturing process, we will use employees to convert material into finished product. Sometimes there are certain processes whereby they use automated machine to convert materials into finished product. But under direct labor cost, we consider a human being as an employee as our direct labor cost. So the cost of employee is also an integral part to finish the product, because if you don't have anyone to convert your material from the wood just now to a guitar, therefore you will not have a product. Okay, so same condition applies here, in integral part and a significant portion. So example of direct labor is the wage of employees who cut the guitars out of the raw lumber, which is the wood just now, and also the assembly worker. So the mechanic wages for automobile, machine operators wages for manufacturing tool, assembly wages for assembling a laptop computer. So under direct labor, they directly related to the product. Usually they will touch the product and give their services to complete the product. So that is what we considered as direct labor costs. So the third one is factory overhead costs. Factory overhead costs can be quite blurry, quite be confusing, because it is a cost that is not categorized as direct material and direct labor. Any cost that is not a direct material cost and not a direct labor cost will be categorized as factory overhead costs. So for example, heating and lighting the factory. So to produce a product, we will manufacture them in the factory. Therefore, we will use some kind of electricity. We will use heating and lighting the whole factory. So let's say the factory produces 5 different products. So you cannot actually try to estimate specifically how much lighting would it take to produce one product, which is product A just now. It is very impossible for you to try to separate the cost of the lighting when you are producing 5 products. Okay, so that's why the factory cost just now is considered as one whole cost and is directly categorized under factory overhead cost. So same goes to the insurance just now, the property taxes on the factory building. So you cannot try to apportion these taxes into the product just now. Okay, sometimes the production we produce one product, sometimes in the next following month we are producing three different products. So it's hard for us to trace and try to allocate a specific tax for the product. Okay, so for example here, factory overhead cost also includes indirect material and indirect labor. Okay, so for an example of indirect materials are the cost of oil to lubricate the machine just now. Okay, so in order for us to produce a product, we need to have a good machine which is maintained well and can work properly. So in order for us to make our machine working smoothly, we will have to use some oil to maintain it, to lubricate the blades and so on. So these are the materials that you cannot directly see by seeing a guitar. Okay, so that is considered as indirect material. Some material that cannot be seen on the product. And the wages of janitorial and supervisory employees are considered as indirect labor. Okay, like the cutting employee just now and the assembly workers are workers that touch and assemble directly the product. They will have some contacts with the product. However, for the janitorial, the cleaners of the factory and the supervisors, they don't have to touch the product in order for them to do their work. They just have to monitor, they just have to clean the factory. Therefore, this is the indirect cost, indirect labor cost that have been incurred to produce the product just now. So both of indirect material and indirect labor cost might not be too significant for the total product cost, but it is considered under factory overhead cost. Okay, so the second categorization is you can categorize the cost into prime cost and conversion costs. So we have learned just now that manufacturing costs consists of direct material, direct labor costs, and factory overhead costs. So we can categorize them two different groupings, which is prime cost consists of direct material and direct labor costs. Conversion cost is the cost of converting a material into a finished product. Therefore, it consists of direct labor and factory overhead. Only direct labor can be found in both prime cost and a conversion cost. Direct material plus direct labor are prime cost, and direct labor plus factory overhead costs are conversion costs. And then the third categorization is product cost versus period cost. So product cost consists of all manufacturing costs just now, direct material, direct labor, and factory overhead. Therefore, product cost equals to manufacturing cost just now. And then the second one is period cost, whereby they separate selling and administrative cost from the product cost just now. Period cost equals to selling expenses and administrative expenses. Selling expenses are any expenses incurred in the marketing department to sell and to market and to sell the product and to deliver the product to the customer. For administrative expense, they are the cost incurred to perform administrative function to manage the company and are not directly related to the manufacturing of selling function. For example of selling expenses are the commissions of the salesperson, the marketing managers, the advertisement costs, and for administrative expenses such as the finance manager's salary, the account clerk salaries, and the admin clerk salaries. So let's say I have three different examples. Admin clerk will be categorized as admin expenses. Finance clerk will be categorized as admin as well. Sales clerk will be under selling expenses, and production clerk will be categorized under factory overhead. Okay. So here I would like to make some correction. Guitar string can be considered as direct material, because if you don't have a guitar strings on your guitar, that will not be a guitar. It will be a half finished, incomplete guitar. Therefore, the guitar string, I would like to say that it is included under the direct material cost here. So basically, why do you need to differentiate between product cost and period cost is because it goes into different type of financial statement. Under product cost, it goes to the inventory first, which is under balance sheet statement, and then it will go also to the cost of goods sold, which is under income statement. But for period cost, it will go straight away to selling and administrative expenses under income statement. So for product cost, it goes to two financial statements. However, for period cost, it goes to only one financial statement. Okay, so this is the last part for learning outcome 3. So under learning outcome 3, it talks about what kind of financial statements there are for manufacturing business. It is very similar to what you have already prepared for financial accounting. However, the balance sheet and income statement for manufacturing businesses are more complex because it has an additional item such as the product cost just now. So let's see. Under balance sheet, there is a new items of different type of inventory for balance sheet for manufacturing business. It has three different inventories, which is materials inventory, work in process inventory, and finished good inventory. So material inventory are those materials that has not been used in the production, while for work in process inventory just now are the half converted materials, but has not yet been converted into a finished goods. And then for finished good inventory are the finished product of the guitar just now, already completed but have not been sold. So this is difference and illustration showing you the difference between a balance sheet for merchandising companies and a manufacturing companies. So there are three different inventories here for manufacturing companies. So for the income statement for merchandising and manufacturing business also differ mainly on reporting the cost of the merchandise goods available for sale and sold during the period. So merchandising business, which is they only buy a finished product and sell it back again to the market, while manufacturing business build and manufacture their own product and then sells to the market. So for merchandising business, they already have a completed finished good for sale. Then they will get a cost of merchandise sold. So for this, it means that the merchandise is not yet sold, still in the inventory of the company. So the cost of merchandise sold just now can be derived from this formula until here. For income statement under manufacturing business, there is a cost of goods manufactured and additional of cost finished goods available for sale, which is similar to merchandise available for sale here, but there is an additional cost of goods manufactured here, then you will get cost of goods sold. So this is the equation to get merchandise available for sale, and this is the equation to get cost of merchandise sold. So you will need to understand this equation and try to do the calculation. I will make sure that the tutorial question will cover these equations. So and then another two equation is to determine the cost of finished good available for sale and the cost of goods sold. So this is the statement of cost of goods manufactured for manufacturing business. So there's, as you can see, there is a lot of cost being uh, recorded here, and what makes it the income statement for the manufacturing business is more complex. So in order for you to derive a statement of cost of goods manufactured, there are three different steps, which is the first one is to understand to determine the cost of material used, and to determine the total manufacturing cost, and to determine the cost of goods manufactured. So this is the end result that you would like to know. So the flow for manufacturing cost is manufacturing costs that you have learned just now consists of direct materials, direct labor, and factory overhead. If the direct material are unused, therefore it will go to the balance sheet under material inventory. If it is used, it will be gone through the manufacturing process together with the direct labor and factory overhead just now. So after the product is unfinished, therefore it is considered as work in process inventory because the goods is not yet completed, it is half completed. If the goods are already completed and finished, therefore it will go under finished goods inventory. Once it is sold, then that will be considered as cost of goods sold under income statement. So you can actually walk through to these remaining slides and try to work it through how do they calculate the cost of goods manufactured just now. So the step 1 is listed here, illustrated here, step 2 and step 3. So you can actually learn it on your own, and I will try to make sure that all tutorial question covers in this. Therefore, it is very important for you to try and attempt to do the tutorial and submit it to get the marks for your quiz assessment. So this is an illustration differentiating the income statement for a merchandising product, for a merchandising business, and this one is for the this one is the income statement for manufacturing company, whereby in order for you to do your income statement, you need to have the cost of goods manufactured first. So you have to calculate first the cost of goods manufactured according to this format. Okay, that's all for this week. I hope these recorded videos helps you a bit in learning the lecture slides. I know if you would like to ask me any question, you can just ask me directly to in the WhatsApp group, or you can also text message me or PM me personally. Please do not be scared or shy to reach me out. I will try my best to help you and answer any question that you give as fast as I can. So I hope everyone will learn within their own time. Okay, find a suitable time that you are comfortable with, and please try to attempt and submit your tutorial. Okay, so if you do not attempt and submit your tutorial on time, therefore you will be losing an easy mark. Okay, that's all for today. I will see you again next week.